Welcome to Yahoo Finance's flagship show, The Morning Brief. I'm Julie Hyman. Let's get to the three things you need to know today. First up, U.S. stock futures pointing to gains at the open as investors gear up for a busy week. On the trade front, the Trump administration doubling down on that August 1st tariff deadline. Commerce Secretary Lutcick saying countries will start paying higher tariff rates even if negotiations are ongoing. But new comments from Treasury Secretary Bessent may allow for some flexibility. All of this coming as European officials work to hammer out a deal. Reports say the EU is gearing up for a battle as Trump administration demands have increased. Plus, earnings season kicking into high gear. Two of the Magnificent Seven reporting this week, Alphabet and Tesla. We've got the key details you need to be watching for. And the future of the Fed, a new report from the Wall Street Journal highlighting how Treasury Secretary Scott Bessent made the case to President Trump to keep Jerome Powell as Fed chair. But the president is pushing back, and Powell is set to speak on Tuesday, focusing on financial institutions. The central bank is in its blackout period from discussing monetary policy ahead of this month's meeting. Let's get a check in on stock futures right now. We are watching a little bit of an indication for higher open, but still very small gains being pointed to here as we are seeing investors kind of wait for some of the big earnings reports of the week. And on that front, let's turn to our top stories of the day. Futures rising as investors eye trade developments, plus big tech earnings kicking off this week with Tesla and Alphabet set to report, and Fed Chair Powell speaking at a banking conference tomorrow ahead of next week's policy decision. Joining me now, senior reporters Ali Canal and Josh Schaefer. Ali, let's start with you. As I said, it feels like today, yes, we have some trade headlines still sort of trickling out, but it really feels like the attention now is firmly on earnings and earnings season. So what's the sort of vibe been so far?
Yes, Julie, I definitely think in the near term, the focus is going to shift to earnings, not as much as we've seen with trade. And so far, we have seen solid earnings. We had the big banks reporting. We had Netflix kicking off a lot of those big tech earnings. However, despite solid reports, we didn't see that reaction translate to stock prices. So the big banks ended the week with fairly muted gains, despite saying that the consumer remains resilient. Netflix closed down 5% on Friday after a beat and raise. So it just shows that investor expectations are high, and heading into the second quarter, earnings revisions had really led to a low bar. So because of that, investors are expecting a lot from these companies. And what strategists have been telling us is that you can't just beat and raise. You need to really have solid guidance that comes in way ahead of expectations. The misses are going to be punished more than maybe previously they would have been. And this new note this morning from Lori Calvasina from RBC Capital Markets really pointed to this growing thesis here. Her quote was, "Our first impression of earnings is fine, but not fabulous. And within this environment, you really want to be fabulous." And we have some data from FactSet that shows earnings are estimated to rise 5.6%. And this is ahead of the 5% that was previously projected for the second quarter. But if that number hold, it would still mark the slowest pace of profit growth since the fourth quarter of 2023. So again, that low bar, and we just have these high expectations, especially as we hear from more Magnificent Seven names over the next few weeks, with Alphabet kicking us off.
Yeah, and to your point, even if things are fabulous, right, it doesn't mean the stocks are going to go up. Now, let's turn more to the Magnificent Seven earnings. Josh, we've been waiting for this sort of broadening trend in earnings, and there has been some broadening in terms of the contribution from non-Mag 7 companies, but it hasn't changed that much.
No, Julie, it hasn't. So if you look over the past really 2 years at this point, the S&P 500 earnings have essentially been a story of Magnificent Seven earnings growth, significant earnings growth, and basically no growth from the 493. So what you're looking at on your screen here is data from FactSet. Senior analyst John Butters over there highlighting this in a note. Yellow is your S&P 493. Blue is your Magnificent Seven. So we mentioned Tesla and Alphabet report. That list, of course, also includes NVIDIA, Apple, Amazon, and some others. But the key takeaway here would be what you're seeing is a narrow gap, a gap that is starting to narrow perhaps this quarter and continuing to narrow over the next several quarters. So yes, when we think about the next 2 weeks, Magnificent Seven earnings are very important to overall index earnings that Ali was just referencing. But the key question here remains, does that yellow line that we were just looking at continue to pick back up? Do those 493 continue to show incremental earnings growth while the Mag 7 earnings are slowing? Typically, the trade for investors there would be you would trade the rate of change and you would want where profit growth is picking up, and that would sort of lead to a broadening of the stock market rally. A final point I'll make on that chart, though, because this is a chart that a lot of strategists have highlighted to me over the past year, and you as well, Julie, as we've talked about this broadening of the stock market rally, is every time it seems like we're starting to get there, it doesn't quite happen.
Yeah.
If you go back to first quarter earnings, it was supposed to be a closer gap between the Mag 7 and the 493. And then we were just talking about earnings surprises. Well, where the surprises actually came was again from big tech. So I'll be curious over the next 2 weeks if big tech can come out and continue to surprise again. That's been the trend of this market for essentially 2 years now. If they do that again, then perhaps your broadening thesis isn't as strong because again, if profit growth continues to be stronger than expected in tech, it sort of backs the trade that you've seen with, of course, tech leading the market.
Well, and if you look, Allie, at the two that are leading us off this week, you got Tesla, which we all know the car business is not going great, and the other stuff is not earning it any money yet. And then we have Alphabet, too, sort of kicking off the hyperscalers.
Yeah, and for Tesla, it's the worst performer of all of the Mag 7s. We are off some of the lows that we saw earlier this year, but the stock is still down around 20% year to date. And a lot of that has to do with the bumpy relationship between Elon Musk, President Trump, and also, like you were alluding to, the weakness in its core business, those EV model and cars. And when you look across the landscape here, there's a lot of competition on that front. U.S. sales have been slowing. Overseas, we've also seen that slowing. So Tesla is going to have to really come out swinging in this earnings call. The Tesla bulls have been very focused on the robotaxi rollout, autonomous driving, but even there too, there's a lot of competition. We have Google's Waymo, we have Uber with a new partnership with Lucid. So there's just more competition out there, and Tesla needs to prove that it is the best in the market at doing, this innovation. But that's going to be a really tall order for Elon Musk. And then if you look at a company like Alphabet, first of the hyperscalers to report, and the focus there is going to be on cloud revenue, data, AI. What's the demand looking like there, and how does that set us up for some of these other hyperscalers that will report in the coming weeks? And then, of course, with NVIDIA next month. And really what we hear from the hyperscalers is going to give us more of a clue on how NVIDIA results will ultimately come to play when we see that. And we know for the market, that's a big focus point.
You guys, it's so interesting to me because we obviously always watch earnings, and the market trades on these individual earnings stories. But as you flagged for us this morning, Josh, David Costin over at Goldman Sachs says investors might not even be that focused on it right now.
Yeah, so Costin sort of highlighted in his note from Friday, he's the chief strategist over at Goldman Sachs, and what David Costin was highlighting is essentially, okay, tariffs aren't really moving the market right now. What is sort of moving the market, and what story are investors trading that gets us back to all-time highs, right? And what he thinks kind of a key part of the thesis is the 2026 growth story. This is something that Allie just mentioned, Maury Calvasina. She's also been talking about this too when trying to explain how the S&P 500 keeps moving higher. The theory right now and the thesis would be, yes, growth is slowing right now. Profit growth, as we just mentioned, for the S&P 500 might be its lowest in over a year, but it's expected to re-accelerate again. So too is economic growth in 2026. Yes, we're talking about perhaps sluggish growth to end this half of the year, but then it's supposed to re-accelerate in 2026. So when you combine sort of the macro stories we talk about a lot, whether it be the Fed and if they're going to cut rates, whether it be the overall growth of the economy and how tariffs impact for investors right now, Costin said they feel good about the S&P 500 increasing 5% over the next 6 months, 10% over the next 12 months, as long as that profit growth re-acceleration story remains intact and the economic growth story, the fact that economic growth might come in higher in 2026 than 2025, if that stays intact. So that's sort of, as we think about this August 1st tariff deadline, that's one of the things I'm thinking about key here, right, is how do those tariffs ultimately impact that growth story, right?
Yeah, and as you know, recently we've seen economic data surprising to the upside more frequently than it's disappointing. Allie, let's bring it all back to the Fed. Now, Chair Powell, he's not really allowed to speak about monetary policy because of the blackout period ahead of the next rate decision. Still, there's going to be scrutiny of his comments. And I know you've got your eyes, as you always do, on the CME FedWatch tool in terms of what traders are pricing in for Fed cuts for the rest of the year.
Right, and you were just talking about that strong economic data and the fact that that has come in so strong on top of inflation that is still stubborn. That's pushed out a lot of these Fed rate cuts, and even the number of rate cuts has been reduced by markets. So according to the latest CME FedWatch tool projections, we have 2 rate cuts in total. That's 42% odds that are placed there. That is down from last week. We have the odds of just 1 cut increasing to 29%, and then the odds of 3 cuts also down to just around 20% here. So it's quite possible we could just see 1 cut. There are some strategists on Wall Street, Morgan Stanley, for example, that are pointing to maybe no cuts this year, that we might not see that acceleration of rate cuts until 2026. So there's a lot of varying opinions on Wall Street. We've seen that within the Fed itself. The Fed remains very divided, and that really boils down to what part of the dual mandate you are focused on, whether it be the inflation side or the labor market side. And when it comes to the labor market, we have seen certain cracks underneath the surface, and then increased deportations, the immigration story. That's something a lot of economists have been talking about more recently, that we could see maybe more weakness in the labor market to come. But so far, the economy does remain solid. But any comments from Powell on the state of the economy, the state of inflation, jobs, that obviously is going to be closely watched. But like we were saying, it is a blackout period. I don't expect him to wade too far into monetary policy, and I don't expect him to say anything about the latest drama with Trump and his potential firing. So we'll see what comes out of it, but markets, as we know, always clued into what he's saying.
Allie, Josh, thanks a lot. Appreciate it. Let's turn to the cryptocurrency markets. Ether, the second largest cryptocurrency by market cap after Bitcoin, recently hit its highest level since January. It's up 60% over the past month. Joining me now with a closer look at what's driving this momentum is our senior markets reporter, Ines Ferre. So what's going on there?
So, Julie, there's a lot of enthusiasm around Ethereum right now. And this is not just because Ether is going to be going up in price, but because companies have this bullishness about the entire infrastructure, the network, so to speak, as the financial services industry converges with the crypto world. So what do I mean by that? Is that what analysts are telling me is, look, you are now have the ability to tokenize real world assets. And that can be anything. That can be gold, that can be currencies, as we've seen also with stablecoin, for example. It can be art, it can be real estate. And those tokens can be stored and moved on the Ethereum blockchain. So the reason why we've seen such a surge in Ethereum recently, really over the last month, we've seen it up more than 60%, is because of this bullishness around the architecture, the infrastructure, the financial layer, so to speak, or the financial network infrastructure around all of the innovation that's happening in the digital space and when it comes to financial services. So many stable coins run on Ethereum, and we saw a huge surge after the Genius Act was passed. And you also have companies like the miner, for example, BitMine, which went public on June 5th, on the same day that Circle went public as well. And they have now acquired more than $500 million of Ethereum. So that's a pure play on Ethereum. Now, this does not replace this Bitcoin strategy. And you have companies like Strategy, for example, Michael Saylor's Strategy, and he has said he does not plan to buy Ether. His bet is on Bitcoin. Bitcoin is the one that he sees as the commodity, as valuable. But as far as other companies are concerned, they're very much betting on this infrastructure, the network behind this convergence of the financial services and the crypto world.
And sticking with Bitcoin and the sort of Bitcoin treasury on a lot of corporate balance sheets, Trump Media, the latest one that is jumping into that pool, Ines.
Yeah, that's right. So Trump Media now holding $2 billion in Bitcoin and Bitcoin-related securities. And these holdings are making up now 2/3 of the company's $3 billion in liquid assets. So this just goes to show you this push from companies to go towards holding Bitcoin on their balance sheets. Still a huge, Bitcoin is in the #1 cryptocurrency in the world by market cap. And DJT, though, I do want to add, is there is a difference when you look at these companies that are acquiring Bitcoin. Some companies are acting more like meme-like type of stocks when this happens, and other companies like Strategy, for example, is up 40% year to date. But if you take a look at DJT stock, it is down about 45% year to date. So just because companies acquire Bitcoin doesn't necessarily mean that the investor reaction to that is the same as you would see when a company like, for example, Strategy acquires it.
Yeah, if nothing else, Strategy seems to have sort of a first mover advantage in that way as the company that sort of pioneered that strategy.
Exactly.
Inez. So it's been interesting to watch. Thanks so much. Appreciate it.
Thank you.
Now, time for some of today's top trending tickers. We are watching Verizon, Alaska Airlines, and Microsoft. First up, Verizon raising its full-year guidance after reporting robust earnings. The U.S.'s largest mobile service provider beating expectations on the top and bottom line for the second quarter. Despite those strong results, the company still lost postpaid phone customers for the second straight quarter. Analysts were anticipating a net addition of 13,000 connections during that three-month period. Verizon also recently won regulatory approval for its acquisition of Frontier Communications, which will help expand its fiber footprint. That deal expected to close in the first quarter of 2026. Next, Alaska Airlines is resuming operations after grounding all of its flights due to an IT outage. That outage began around 8 p.m. Pacific time on Sunday. It lasted about 3 hours. Alaska did not specify the nature of the outage. Sunday's grounding marks the second time that Alaska Airlines has halted its fleet in just over a year. And finally, Microsoft confirming a massive breach of U.S. federal and state agencies due to a flaw in its server software. In an alert to users, Microsoft said that a vulnerability allows an unauthorized attacker to perform spoofing over a network. The tech giant also provided recommendations to stop the attackers from exploiting it. The Washington Post, which first reported the hack, noted it was not immediately clear who was behind it or what the ultimate goal was. You can scan the QR code below to track the best and worst performing stocks with Yahoo Finance's trending tickers page. Well, cryptocurrency assets topping $4 trillion in market cap for the first time, or roughly 7% of the S&P 500's market cap, 13% of total U.S. GDP. My next guest says that could be an interesting signal to watch for markets. Joining me now, Michael O'Rourke, Jones Trading Chief Market Strategist. Hey, Mike, it's good to see you.
Hi, Julie.
So you're a stocks guy, right? But you like to look at tea leaves all over the place to try and figure out what kind of investor sentiment we're seeing here. So the enthusiasm and the growth that we have been seeing in crypto, what does that sort of tell us about animal spirits cross asset?
Well, it's interesting. I mean, I believe in the Warren Buffett tenet that to be an investment, you have to be an income-producing asset. And obviously, these cryptocurrencies are not income-producing assets, so they're speculations. And a lot of people have made fortunes speculating them in recent years. But I do think, when you measure an asset class like this and how big it's become relative to the stock market, it can give you an idea of what the speculative juices flowing out in the markets are. And what I'm seeing here is that at $4 trillion in assets, the collective cryptocurrency market cap is about 7% of that of the S&P 500. And that's a level we reached back in late 2021, right before the equity market peaked. And to be fair, obviously we had interest rates kick in 2022 that weighed on the equity market as well. But it just shows there is a lot of speculation out there in the state.
And so how are we seeing that also in the equity market itself play out?
Well, I mean, it's interesting. We have the S&P 500's market cap to GDP here is 185%, which is a new record. In the 2000 bubble, we peaked at 120%. And if you add in the cryptocurrencies, or if you take the entire U.S. market, U.S. equity market cap, which is the Russell 3000, you're at about 230% of GDP. So this is, it's an expensive tape. There's a lot of excitement out there. Obviously, we have potential headwinds coming up in a couple of weeks, or Friday of next week with the new tariffs theoretically kicking in. So it's just a really interesting environment out there that people don't seem to be worried about risk.
And so what are the vulnerabilities then, I would ask? Like, it sounds like you think things are kind of delicate at these levels or toppy potentially at these levels. what are then the top contenders to poke holes in what's been going on?
Well, I think the biggest problem we're going to face is August 1st with these new tariffs, in the sense that they are pretty much the same as the April 2nd tariffs. In some cases, they're worse. So if that does come to fruition, I think markets will be surprised and shocked. I think everyone is conditioned to think the president won't follow through. So I think that's a larger concern. And when you come back to this cryptocurrency story, you just had the previous segment about these treasury companies. That's been the big theme the past couple of months. And the interesting aspect of that is all these companies are selling equity in order to buy the cryptocurrencies. So you're definitely seeing people favor, or I guess it's more speculation in that market, and they're willing to sell equities. The companies are selling stock to the public in order to finance the purchases of the crypto assets. It just makes it a really interesting dynamic here.
And it sounds like you're skeptical of that dynamic, that things could go wrong.
Well, I just don't understand if you believe in cryptocurrencies, and like obviously the tenet behind Bitcoin is that there's a limited amount that can be created. I don't know why you'd invest in an equity company that's going to continually sell stock in order to pursue this business model. So you're taking away that key quality that you liked about Bitcoin, and you're putting yourself at risk for perpetual equity sales and diluting yourself. So it doesn't make a lot of sense to me, but obviously there's a lot of people excited about it, and there's a lot of people doing it.
And more broadly in the markets right now, I mean, obviously we keep sort of pushing up towards new highs here, Mike. As we were talking about earlier in the show, economic data has been beating estimates, right? So it seems like there is a bull case to be made here for stocks potentially to go higher. What do you think of that side?
I think the segment you did earlier about the earnings breakdown between the Mag 7 and the other 493 is the most interesting part. I do think there's many attractive names in the other 493, and you're seeing that Mag 7 earnings growth really start to decelerate. And the reality is that Mag 7 earnings growth has really been driven by NVIDIA, which obviously with its $4 trillion market cap itself has already priced in a lot of optimism and a lot of future growth. So I don't want to say there's definitely opportunities for long investing out there. The problem is the Mag 7 collectively has become so expensive that it's made the S&P 500 itself expensive. But whereas if you look at the single stock level within the S&P 500, there's a lot of high quality blue chip names out there that investors can look at, and their valuations are attractive to where they've been relative to where they've been the past 5 years.
Yeah, so investors should not forget about the other stocks there in the S&P. Mike, it's good to see you. Thank you.
Thanks, Julie.
Coming up on Yahoo Finance, we've got Opening Bid. Our own executive editor, Brian Sozzi, is joining us now. Brian, what's coming up on the show?
Yeah, locked and loaded, Julie, and all things Tesla. Big week for earnings for them. So much focus on the robo-taxi. I think investors want to know when you're going to sell more cars and make more money from doing it. And then, of course, Julie, I'll look for a place to insert something on Domino's. That is my story of the morning. They sold stuffed crust pizza, and they returned to sales growth in the second quarter. Big day for them. Yeah, and we got an analyst coming up later on that as well. That does it for Morning Brief. In the meantime, much more ahead on Yahoo Finance.